Hello and welcome to the Value the Markets webinar with Armadale Capital. My name's Ben Turney and I'll be hosting today's event. Today we're joined by Armadale's directors, Matt Ball and Paul Johnson, who'll be giving us a 15-minute presentation about the company, the latest developments with it. There's been news out today which they'll cover. We'll be hosting then after the presentation some questions from shareholders. If during the course of the event you'd like to ask a question to Matt or to Paul, there's a chat window in the bottom right of your screen. Please simply type the question in there. That will go through to our moderator who will feed the question through to us. I've also been given a number of questions by shareholders in advance of this event. So I'll hand over to Armadale's chairman, Paul Johnson, who will begin the presentation. Over to you, Paul.
Well, good afternoon, everybody. Thank you for taking the time to attend the webinar. We'd like to take you through an interesting story. The market's difficult and challenging at the moment, but we have a stock with Armadale Capital that, with the support of shareholders, we've seen an appreciation in the valuation and the share price, which is certainly counter to what's happening in the wider market. We are an investing company. We're listed on AIM with the ticker ACP. And we have a diversified portfolio, but one primary project, the Mahenge Liandu graphite project in Tanzania. This is a high-grade, high-purity graphite project. The graphite market itself has seen considerable growth in recent times, and the forward dynamic is impressive. What we see in the market is an increasing demand for very high-grade, high-purity products, and the project in Tanzania that we own 100% is delivering that based on all the metrics and all the work that's been undertaken to date. So we feel we have a project whose product is going to be in high demand over the coming years. Our valuation in the marketplace compared to our peers, the vast majority of whom are ASX quoted, is very low. We're undervalued, and we will come to that shortly in the slides as we take you through the presentation. And in some cases, our peers are trading at many multiples to our current valuation level. Perhaps this is Brexit, perhaps this is AIM, but we feel that with the work that's being undertaken in the business and the news flow in the near future, we should see a narrowing of that valuation gap. We're progressing with a definitive feasibility study. And there are multiple work streams from that work program. Each of those work streams will be, when completed, will be announced to market. Our policy is to update shareholders with each step as we progress through towards DFS completion around the end of the year. We've had an excellent run of results that you'll have seen from the market news announcement. And we have nothing in our information set to date to suggest that that will change. Obviously, as we work through each point of the DFS program, we get latest findings and we can't see in advance, as it were, but based on everything we have in the information set at the moment, we're pleased with what's happening in that work program. So, taking you to slide 2, the corporate information, we have approximately 400 million shares in issue, giving us a value at or around, depending on the day of the week, around £10 million. You can see there are substantial shareholders there on the right-hand side, including Matt, who is about to take you through the project and give you a little bit more information, who holds a significant percentage of the company. Our share price chart, bottom left, has seen some bobbling around during the 2019, but now has delivered traction and an increase over recent times. We've seen the price move from a little under 1 pence, and it's now 2.5 pence. With the news today, it's had a small, we think, increase in price, and hopefully that in the coming days. Moving on to slide 3, a brief confirmation of what we've just been through there, that we're an investing company. We're focused on the Mahenge Liandu graphite project in Tanzania. We do have other investments, as we are expected to do as an investing company, but as you will appreciate, we want to focus our attention and our market announcements on the biggest asset within our portfolio. Our board and management, we have an interesting mix of people. The idea behind any board, I think, should be to have a diversified mix of skills. Steve Mahede, an executive director, is a qualified engineer. Nick Johansson, a qualified lawyer. Myself, Matt Bull, the geologist within the team, and we have Jenny Lee, who is our China representative for graphite marketing. And as you will have seen from the announcement earlier today, we've been very active in China, and there's been a phenomenal take-up with the offtake MOUs. And we're in this slightly intriguing situation where we have MOUs in total, which account for about 120% of the initial planned production from the project. So moving on to the projects, I'll now hand over to Matt Bull, who can take you through the project in further detail.
Thanks, Paul. Armadale bought the project in 2016 and 100% owned it. It's quite a small project tenure of around 30 square kilometres, and within that license, it's got one of the largest high-grade graphite flake projects in the world. The Mahenge region is known for its very large and high-grade deposits, and there's two other similar in the region, Blackrock and Quiberon Resources, which have similar geology, similar deposits to us, similar grade. Both those companies are capped significantly higher than what we are at the moment. Those companies are a little bit more advanced, and they've done some significant test work on their projects, which is showing extremely high quality graphite. And the Mahenge region has the highest purity of any region in the world. Both Blackrock and Quiberon have gotten up to 99% purity on their test work programs, which I mentioned was very extensive test work programs. Just recently, we did a resource update. I think it was last week we completed the resource update, which increased the global resource to almost 60 million tonnes at close to 10% graphite. And now a majority of the resources in the indicated and measured categories, which are the highest confidence categories. As you can see from the image there of the drill holes, we've really done very close space drill planned mine area. So we're extremely confident with the geology and the size of the resource. So when we move into the mine planning phase, we're going to be very confident that we can really accurately determine project economics for the upcoming feasibility study, which is ongoing. We've also completed a detailed metallurgical test work program on diamond core samples, which we drilled out last year, and we achieved up to 97% purity on the larger and medium-sized flake fractions, which is extremely high quality graphite compared to the standard 95%. The previous scoping study that we completed in 2018 was based on 13 million tonnes of the global resource at 12.5%, which is a 32-year mine life based on the planned 400,000 tonne per annum throughput. And using those metrics, the returns in the project were extremely high. We got an NPV of almost $350 million US and an IRR of 122%. And the reason the project economics are so good is because it's a very high grade near surface deposit with a high purity product. So we're really looking at mining a smaller throughput with a low capital cost, and that's how we're getting the very high returns on the project. We have done some previous year, we did some downstream test work, which we confirmed the product can produce battery grade graphite up to 99.99% purity, which is pretty much as high as you can get for the medium and large flake sizes, which are used in graphite production. We also did some test work on our graphite concentrate, which showed that the larger flake size fractions above 180 microns really expand quite significantly, and those fractions go into a graphite market. So there's two really big and expanding markets we can sell into based on our product, which really gives the project some options and some marketing capacity, which is why we're able to get offtakes quite easily. When we compare the project to other peers in Tanzania and in East Africa, the Mahenge project stacks up extremely well. We've got one of the highest head grades of all the projects. and that's likely to increase further based on the more recent drilling program, which we had up to 17% for 1.2 million tonnes close to surface. Some of the drilling results we got had even higher results than that, 20% photographic carbon for significant intercepts. So there are extremely high grade parts of the deposit, and we already are one of the highest grade deposits in East Africa. As you can see from the other chart, we have a relatively lowish output planned, having a lower capital cost, and we plan to produce a lower amount than other companies, but that's how we're getting the higher internal rate of returns, because we've only got a $35 million capex. Some of the other companies like Magnus have 100 million plus capexes, so that's how they're getting the higher throughputs. When you compare the company's capex per tonne, it's relatively low, because we have using a high grade and a low capital model, and we're also producing one of the highest quality graphite products on the market. So we really are one of the highest returning projects in East African graphite. And as we can see from this chart, we can see that the demand for graphite is rapidly expanding from virtually nothing in 2014 up to over 1 million tonnes in 2025. So, and that ramp up is really starting from around 2018 and 2019. So we should really start to see increased graphite, increased prices, and we're already starting to see increased development money coming into East Africa, with an announcement from Walkabout today that they're getting a $40 million bond issue. There was an announcement last month that Triton Resources in Madagascar, in Mozambique, funding from a Chinese group as well. So investment really is starting to flow into East Africa now. A summary of the drivers for the graphite market are the key ones are electric vehicles, electronic equipment like mobile phones, computers all use high purity graphite in their makeup. So those markets are rapidly growing. Also, the power storage market is growing significantly as we try to move towards more renewable energy sources. A fourth area is expandable graphite, which is used for flame retardants and building materials. That market's growing quite significantly, and that requires large flake graphite, which is only present in East Africa. India aren't producing that size graphite, so they're not able to even produce any expandable graphite for that market. Secondary global demand drivers are graphene, which is used in electronic and medical and chemical industries. So while that market is quite small by tonnage, the prices of that is up to $100,000 per tonne. So if you can sell a little bit into that market, it can make a difference to your overall price you're getting for your graphite concentrate. Graphite sheets and graphite foils also growing quite significantly. So that's used in quite a few various uses, including gaskets and tapes and packing, as well as graphite used in electronic products like smartphones and computers. As demand starts to pick up significantly, there's actually reduced production coming out of China and out of India as well, because they're running down on resources, as well as there's more environmental concerns with how they're mining and how they're processing graphite in China as environmental concerns grow in that country. I'll pass across to you now, Paul.
Okay, so just to complete the presentation, as an investment company, we do have a portfolio of interests. The key focus obviously has to remain on this major graphite opportunity in Tanzania. We do have presented to us a whole variety of different opportunities, and we have to be careful because we don't want to divert attention away from the graphite opportunity. However, we do keep an open mind on the pipeline if other complementary opportunities came in that were of sufficient value, then we would look at engaging. Right now, the agenda is pretty full with the Tanzanian project. Looking again at the investment case, we're focused on building a significant high-grade graphite mine. All the evidence that we have in front of us suggests that the ingredients are there to do just that. And we benefit by having neighbours who have done the job already in many ways. So the data that they produce relates to our project as much as to theirs. We've had numerous milestones across 2019, but as we are now just almost 1 month into the fourth quarter of 2019, the pace does actually heat up. We will have news flow across multiple areas of our of the project, and it will be largely, but not entirely, related to the completion of the DFS, which we have scheduled for around the end of this year. The March 2018 scoping study is the lead information for people seeking data on the project, with its 400,000 tonne per annum operation over a 32-year mine life. The data is quite staggering with regard to the project, with an NPV of 349 million US and an IRR of 122%. Now, that is not where it ends, because there is considerable upside with the 32-year mine life based on just a quarter of the resource. We're underpinned by a marketplace where our product, particularly high-grade product, will be in significant demand. Some evidence of this as an investor, which of course you would do, the MOUs signed demonstrate the significant interest in the project. And we have this unusual situation where our MOUs exceed the published initial planned production. The information is coming in fast across the company at the moment, across the project, so much so that we can hardly keep up with updates to the presentation. So apologies, this says 2 MOUs, and obviously we now have more. And we have a team that's looking at other exciting investment opportunities, but in truth, we don't think you could find something more exciting than Mahenge Liandu at this moment, which is why the focus of the company is on that project. We have a disclaimer, which I need to bring your attention to, which covers this presentation and what it may be used for. And thank you very much for taking the time to listen. I think, Ben, we're moving on to questions.
We are. Okay, well, thank you very much, Paul and Matt. It was very interesting to listen to your update on the company. And as you say, you've had a hell of a lot of news flow over recent months, so your presentation can barely keep up with that. So in that vein, Paul, I'll direct the first question to you. Let's talk a little bit about today's news, and obviously the announcement of your latest MOU with an offtake agreement, which now takes you up to offtake arrangements of 60,000 tonnes per year, when your projected production is currently 48,000 tonnes. Is there a case that investors might be able to infer from that there could be a plan to increase production potentially at Mahenge Liandu?
Well, thank you for starting off with a tricky curveball question. I think it's when you have this magnitude of resource, you always have to look at the potential for increasing the throughput, but you have to start somewhere. Now, in the public domain at the moment, what we have is, as was published in the scoping study in March 2018, the DFS will provide further information with regard to all the figures on production levels and so on. And then there is clearly scope for a significant increase in production. That's unequivocal from the data, given the level of resource that there is at the project. And the level of building demand, as evidenced by the amount of MOUs versus initial planned production as published, is evidence of the interest in the project and in the product that will come from the project. So if you have an active market environment that can soak up the product, if you have an operational environment where you can reasonably produce more, you have a project that's able to deliver that volume, then it has to be a consideration.
Excellent. So Darren actually asked us a very good question then in relation to the MOUs. Obviously, we understand that at this point they're non-binding. Could you just maybe talk us through a bit about the process of moving from an MOU to a more binding offtake agreement and how straightforward that is?
The offtake parties want to do some downstream test work to confirm that our product is going to match what they're aiming to be able to produce. So we've already started that process with the first 2 companies, and we're in advanced discussions with the mattress group to progress that further towards binding offtake. So they just need to confirm that our product is going to be able to produce what they need for their downstream use for our product. So that's the process.
And are you able to give any sort of indication over potential time frame?
We expect to get the first binding agreements certainly this year.
Excellent. So Baljinder Baines has asked a question asking about the longer term plan for the company. Now, he's asked, is the plan to begin mining or to prove up more resource and sell to a neighbour who is further down the road? What vision do you see for Armadale and this project, Matt?
We certainly see mining as the best path forward for the company. We already have over 100 years of resources and 86 years in indicated and measured resource categories. So we already have well enough graphite resource to not need to worry about expanding, even though the deposit is open in pretty much all directions. So we think returns in the project really justify obtaining the capital and starting mining. So that's what we're going to do.
So when you actually come then to producing graphite, I've got a question here from Simon Dobson. It's a bit of a technical question. He says, are the company planning on creating a spherical graphite processing facility? Is that part of the plan?
No, we're going to be producing a graphite concentrate and shipping it to secondary processors, and they'll be making spherical graphite.
And as you've already highlighted to us, one of the advantages of Armadale's model is that yours is a relatively low $35 million capex requirement. So Tony's actually asked us a question about that. How are current project financing conversations progressing? Are you able to share any more information about that?
Yeah, we've discussed with several groups about how we obtain project funding, and there's quite a bit of interest, particularly out of China. At the moment, we're focused on finishing the feasibility study to really be in a stronger position, which we're now really close to finishing, and we need to finish that before we can push those discussions further. But there is a huge amount of interest given the returns of the project, demand for graphite. So we're becoming increasingly confident about that.
Excellent. So and then in terms of the DFS itself, the company's previously announced that it hopes to release this by the end of the year. Hans has just asked us for confirmation that the company is still on target to meet that deadline. Is that still the case, Matt?
Yeah, that's still the case. We're progressing on multiple fronts. We've just done a capital raise recently, which is enabling us to push on all finished tasks.
Excellent. So then in terms of the DFS, Rob Malloy has asked us a question about the economics of the scoping study. Do you anticipate any potential improvement in the project economics, or do you see simple confirmation of what we already know, and obviously the business case being put together from that point?
Well, most of the results we're getting have been considerably better than what we'd modelled in the scoping study. We did use quite conservative figures, particularly on pricing. We had a relatively conservative head grade, and we've now confirmed the grade's quite a lot higher in the areas we're going to mine initially. Really didn't push the envelope with the scoping study. So, and now we're getting better results. We would expect to see quite a significant improvement from previously.
So then we've obviously, you mentioned on slide 10, perhaps we could go back and have a look at it, the peer comparison. And one of the aspects of the company that's particularly excited British private investors is the fact that Armadale is relatively undervalued compared certainly to its Australian peers. What do you put that down to, Matt? Why do you think there is that disparity in market appetite?
Well, I guess there's been a lot of graphite companies active in Australia since maybe 2011, 2012, and there's maybe almost a dozen companies active, and they're all pushing their own stories, and there's a lot of interest, there's a lot of knowledge about the market, whereas we haven't got that knowledge in the UK market. So I think that's one of the main reasons.
And how do you see this? So Paul, let me ask you this question, because obviously you're much more involved in some market dynamics. What more do you think can be done to help educate the British market about the potential that there is here, so that we can see that gap close between the Australian attitude towards these companies and the British one?
Okay, I think there's a few dynamics at play. we have a peculiar environment in the UK at the moment where there's a degree of uncertainty on different levels, but including Brexit, that's potentially softening investors' attitudes to putting money into smaller companies. But that will resolve itself, of course, and things will move on. We also have an environment where, with the junior resource companies, there are often not a lot of companies in any one particular space, or very few, as in the case with graphite. And therefore, it's a bit like a shopping centre that only has one store. If you're particularly interested in the what's on offer, you'll go into the shopping centre, but otherwise you don't get the cross traffic. So it takes a little while to get the momentum built up and the interest building up. There isn't a phenomenal understanding, I think, generally around graphite, and Armadale is going to be pulling out some further material on the graphite market, on the graphite product, and continue to leverage this undervaluation versus our ASX peers. The ASX market has, generally speaking, started to see some signs of improvement over August, September, October. We haven't really seen that in the UK, so it will, again, feed through to us with a more buoyant market. The communications from the company continue to come out on a regular basis through regulatory RNS, and we will be doing a lot more intensive infill marketing, media work to promote the message about what we have. We're going into the kind of final rounds of the DFS, and that's the point when we really do need to articulate the message far and wide, because this is quite a special story, and the current valuation level of the company on the market versus peers and versus any sensible metric you want to use, including the scoping study for 2018 or any estimates for what the DFS might yield in 2019. We are considerably undervalued, and we do need to work on that and resolve that situation. So it will be multiple things, Ben, that we do over the next couple of months that investors will start to see more of the story. It's more about graphite, more about our position in Tanzania, more about the offtakes, the customers that and the products, and so on. And I think with that effort, more and more investors will start to be comfortable with the story and take a position.
Absolutely. And I suppose one of the things that you must sort of take quite a lot of comfort from is that even in very difficult market conditions locally on AIM, with liquidity being as tight as it is, we've seen the Armadale share price has performed relatively well, actually very well compared to the other small exploration companies that are out there. So I suppose that once that tide starts to rise again and we see a general turn in the market, you must feel very confident that Armadale is well positioned to take advantage of that.
Oh, yeah. I mean, you've seen if you look at the chart from, excuse me, earlier on this year, you've seen quite an intensive increase in the volumes. Anyone who goes back over the the share price from early 2019, it wasn't thinly traded, but it was much less traded than in 2018 than it has been this year. We obviously had to early in 19 get the company rolling with the news flow. The markets generally had a difficult summertime, but the work and effort, notably that Matt has been putting into this project in Tanzania, has started to yield the results, which have been feeding through to the market in August, September time, and that jolted the market into a higher valuation level from just above the 1 pence level all the way up to where we are now, which is 2.3 mid as we speak. Now, I don't think you'll find many scenarios like that on the market, and although it's moved up a fair amount in recent times, we believe internally and the evidence externally versus our peers suggests that we have some way to go. So it's not full off the gas. It's into an accelerated news period and really put the pressure on to try and drive the valuation of this company to where it needs to be.
Excellent. And I imagine you see one of the main catalysts for this potentially, obviously, being the release of the DFS later this year.
Yes, but look at the pattern of news flow leading to that moment. There will be a variety of different updates. across the business. And you will see, I think, a news feed that comes alive. We have lots of areas that updates will come, and I would like the market to feel that it can't rest and wait for the DFS. I want them to feel that at any point there could be another announcement on the DFS progress and other things, and that could come at any time, at any day. So we will be busy.
That's very good to hear. So, so Paul's obviously given us a very confident outlook for the company, Matt. I'd like just to direct the next question to you. Kieran's asked us to tell us a bit more about yourself, and in particular, one of the things that stands out in the table that we're looking at the moment, the substantial shareholders, is the fact that you own 8.24% of the company. Now, it's not quite unheard of among AIM directors, but it's very rare. How is it you built that position up, and what is it that gives you such confidence in the company?
I got around 10 million shares on the VEN, and then after that, I bought almost all the other shares either on the market or in placements. So I put in a very substantial amount of funds over the last, I guess, 3 years, because I really believe the project is one of the best, or probably the best graphite project, certainly in East Africa. So it's certainly one of the highest grade. It's in the best province. It's got extremely high returns. So I really backed in the project, and I've really put a lot of money behind it to make it work. So, and I think we're really starting to see those results come out over the last couple of months.
Yeah, well, it's always good for shareholders to see a director really putting his money where his mouth is. As I say, it's quite a rarity on AIM. Obviously, but one of the things about the company that is a little unconventional is at the moment with the current board structure. There's no CEO in place, so we have non-executive directors. We were asked a question by one shareholder who responded by Tony Carter, who asked whether or not there are any plans to recruit any executive directors to the team to help drive the company forward as it moves into this next period of substantial news flow.
Absolutely, is the answer. I know the general theory about non-exec directors is that they don't do very much, but in our case, we are continuously working. So it's an interesting title, but we're doing lots of different things in the business all the time. But in terms of executive director appointment, this is a very significant project. We're getting to a point, we are at the point where we're moving from an explorer to emerging producer of a very significant project. So yes, there will be a need for the right skills to come into the business. One of the fundamental mistakes companies make at this point is that they don't adjust the executive team and the management team to reflect the needs of the business as it moves from exploration to production. So that will definitely happen.
Excellent, very good to hear. So we have a technical question, Matt, which I'll direct to you from Justin, who's asked what size flake can be produced, and how does this compare to the larger size that attracts premium pricing?
Well, the flake sizes in the Pengi region are most of them are in the medium-sized flake range, which is used mostly in the electric battery market. So that's what BlackRock and Quiberon and Armadale will largely be producing, and that is a very extremely fast growth market. We do have some of the larger flake sizes above 300 microns, which does attract premium pricing. So I think there's a chart in there showing our proportions of flake size, but above 300 microns is the one that is considered jumbo flake. So, and we will produce some of that, and some medium and some finer flakes.
Right. So let's also talk a little bit about the purity as well. One of the key messages the company's been keen to promote to the market has been the purity of what you've discovered so far. You want to just talk us a bit more through that and the implications of it?
Yeah, some of the key markets, particularly the EV market for batteries, require high purities, and also so those two markets are rapidly expanding markets. And both those products are either 99.95% pure or 99.99% pure. So if you're going to be making those products, it's much easier for you to buy a high-grade concentrate, as close to 99.9% as you can. And so those products attract very significant price premiums over the standard 95% product. If you get it below 95% purity, you're getting very, very severe price discounts. So the purity really drives the price in the graphite market. And the Mahenge region is known for the highest purity pretty much anywhere in the world.
And how decisive a factor has this been in helping attract the offtake MOUs that you've secured so far?
I think it's extremely significant. It's pretty much the key feature of our project. Our product is high purity.
Okay, so we've been asked some questions about Tanzania as an operating environment. Justin's asked us a bit of a technical question, so maybe this is something that might need to be answered elsewhere. But can you say anything, Matt, about the current tax and royalty regime in Tanzania? What sort of percentages might the company expect to incur based on revenue?
Well, there's a 3% royalty on graphite concentrates and industrial minerals, including graphite. So, but there's also corporate tax rate, which is 30%. And there is now rules for local engagement, local employment, and those kind of things that have come in since 2017. So the government's really wanting to get more local ownership, local jobs out of the industry. They did have some heavy taxes on the gold sector in 2017, which is, I think, last week or last month was resolved with Acacia. So all those tax issues are starting to resolve over time. But the tax regime in Tanzania is quite similar to other African countries, though.
Right. So, and how well embedded is Armadale in the local country? How well represented is the business to help it navigate through some of these issues?
Well, the largest shareholder, Asimwe Kabunga, is a Tanzanian native. So he was born there. He's been in Australia for 25 years. Steve Mahede is also was born in Tanzania. He's been in Australia for some decades as well. So we have a lot of connection to the country. And both Asimwe and I have been working in mining in Tanzania for quite some time, like 5, 6, 7 years. So we have a lot of connections in the country.
Excellent. So to bring things to a close, we've been through all the questions that were sent to me in advance and that the shareholders have asked about. Apart from one last one, Paul, this is a bit of a curveball at the end, but we've been asked by Tony, who wants to know about the company's current and the extent to which Armadale is funded through its next phase of delivery. Okay,
so we're looking here at the question over dilution, which is raised on a regular basis. But I've been involved in quite a few companies over the years, and I have to tell you, I've never seen a management team or a set of significant shareholders who fight with regard to dilution in the business. They don't want it. They want to keep as much of this company as it is in terms of share capital structure. They don't want to be hacking away at people's percentage holdings with unnecessary dilution. With that in mind, that means that the overall approach of our business, because so many of the internal and significant external participants are not willing to be heavily diluted at silly prices, they have we can only really do financings in the business that have structured in the right way. And you saw that with regard to the financing that was undertaken recently, which was actually done at a premium to market, which is quite incredible in a marketplace where everyone's struggling, or most are struggling, to actually undertake a raise at a premium, where existing shareholders and interested parties are investing quite significantly in the company at a premium. It should give investors great heart. The one thing we have to be careful of, as with all companies in London in particular, is that we don't put ourselves into a position where we have to go with cap in hand to London market to raise money. We have to stay in control of the agenda. And we are absolutely focused on that. We have access to capital from multiple sources. They are very strong sources, very supportive sources. The structures for financings that we put in place with equity and otherwise are done in a way that will protect existing shareholders, avoid unnecessary dilution. And it has to be borne in mind that Matt and the team have done an incredible job taking this project forward in the way they have on such a small amount of spend. It's quite unique. Yes is the answer to, are we confident with regard to financings within the business? Yes, we're confident that when we want to raise money, as we've demonstrated, we can do so on terms that do not disadvantage existing shareholders. We're confident that we have access to financing facilities at all levels, whether it's corporate PLC or whether it's project development. We're confident that we can access the finance that we need on proper terms. And we are very careful and cautious to avoid hurting our existing shareholders at any stage in the process.
And one of the things that was interesting in the presentation that Matt gave was the fact that Walkabout recently has closed a $40 million bond in the country. I think that gives them some indication about what potential financing sources there will be out there to help both fund the project and obviously see Armadale through its various phases of growth. Is that a fair enough assumption?
Yeah, that's a fair enough assumption. Again, in all the different companies I've been involved with, I've not really seen a scenario like this where not only are management defensive of against unnecessary dilution, they also have, as a team, access to multiple sources of money should it be required in multiple different ways. There's a great degree of confidence in financing the business at all different levels, including for project development, which is the main thing going forward. And it's quite unique. So as an investor and as a director, then that's what you want to see. And in fairness, I've been surprised entering the business earlier on this year. I've been surprised that the fundings and financings have been done in the way that they have. It's not commonly seen in the AIM market. The normal thing for small companies is to be cap in hand to the market and to be atrociously treated by the market. And this team and the people surrounding the company are absolutely vociferously defensive of the business and retaining the maximum percentage of the company at all times, which is great to see.
And of course, is reflected in the shareholdings that the board has themselves, which is obviously very encouraging. Okay, so to wrap things up, I'll put the last question to you, Paul. We've already touched on this a bit earlier, but let's just have a final summary of what shareholders in the market expect to see from Armadale over the coming months.
Okay, so we are active, primarily focused on the Mahenge Liandu DFS completion. That process has multiple work streams across whether it be downstream testing, which is important with regard to our business, and also with regard to turning MOUs into binding agreements. We've got the local plant design and logistical pathway work that's literally in process at the moment. We've got the mining license related activities, and we've got the various financing discussions, of course, that carry on in the meantime. We probably have half a dozen, maybe more significant announcements to flow in the next couple of months with regard to the project and the DFS, and there may well be other things as well in the company. So it should be a very active period. We appreciate the engagement of the investor base. We're open to questions at any time. And if investors do wish to ask us anything directly, just pop onto the website and get in touch, or contact the contact details with the RNS when we release.
Perfect. Well, Paul and Matt, thank you very much for your time today. It was a very interesting discussion about the company. We'll provide a video. The video presentation will be made available on Value the Markets from tomorrow morning, which is Saturday, the 26th of October, and we will promote that obviously across the social media. So we'll bring this event now to a close. Thank you very much for your time, and thank you everybody for participating.